Our second facility is in Pennsylvania. We're partnered with Cumulus Coin, and it's co-located and directly connected to a 2.5 gigawatt nuke facility called Susquehanna. We recently energized that facility back in February, and as of the press release that went out a couple of hours ago, we've now energized our full 50 megawatts of capacity there. So together with our operations in New York, we'll have 160 megawatts of Bitcoin mining capacity here in the second quarter.
The TeraWulf team, I want to introduce you to a good friend of mine, Curtis Lucas, who he and I go back, what, Curtis, good, maybe 3 years?
Oh, goodness. Well, I think the first time we talked it was pretty early in the last run. Obviously, I was an early investor in Bitcoin mining companies. I was a miner myself since early 2018, right at the top.
Yeah, the two of us at one point in time, I remember we were talking and we thought we could do no wrong, and we had our Superman capes on, and life, like always, life is always humbling at some point, and we all experienced that. And but I will tell you, Curtis had a lot of influence in the space. He did a lot of stuff online with his podcast. He was a very dear friend of Marathon. He was very supportive, but also very candid and very forthright. Never, if there was something he wanted to know, he would find out. He would put it out there. He was very, very honest with his viewers. But he amassed quite an audience and really became influential in the space. And so somebody who I hold in high regard was always somebody I like to communicate with. But Curtis, if you could kind of take it from there and tell a little bit more about, empire building, what you did, your background, and more importantly, going forward, you're kind of getting back into the space, but you're also still immersed with a lot of investors, correct?
Yeah. My channel was sort of something I wanted to do to sort of showcase and tell the story of my own journey to building an empire. It's been an ambition of mine for quite some time. It's not just in Bitcoin mining or cryptocurrency. It's in a lot of different things. I run a construction company, and I'm a real estate investor. I haven't really covered a lot of that on the channel yet, but it's going to go in that direction. But I'm also going to continue to cover this space because it means a lot to me, and I think that it's still as groundbreaking as it was the day I first learned about it and went down that rabbit hole. I have a technical background. I'm a mechanical engineer, and I have a degree in physics. So I understand a lot of this stuff on first principles. And that's one of the things that about mining that really grabbed my attention. And I've been through the arguments of, the whole proof of work versus proof of stake. I was a miner. I was also a staker. So I really understand this on a technical level from first principles. And I've appreciated the debates that have gone on through this space from the beginning till now and wherever it goes in the future. And then we've got the whole government regulation thing ahead of us. So yeah, there's a lot. Obviously, this space is never boring. And I enjoy discussing all of these things with people like yourselves that are, in this industry in a much larger level. And yeah, being able to get that sort of access has meant a lot to me and the people that have sort of amassed behind, within my Patreon supporters who have actually submitted a few questions that I'll be asking you guys as well that they wanted to have answered. Because yeah, there's a lot in my group that have been paying very close attention to what you guys have been doing over there. So yeah, I was very, very grateful that Jason reached out to me and set this whole thing up. Very much looking forward to it.
Yeah, I think the timing is really good too, Curtis. And as I told you before, everybody else jumped on the call. It took a lot for me to come back into the space. And I'd like to believe I have a lot of integrity, and I think you've seen that in all of our dealings over the years. I would only work for a group that I really believed in and felt like their goals were aligned with shareholders, as mentioned earlier. And I've just never seen a group like this before, who is so committed, put so much of their own money where their mouth is, and they're just the operational excellence. It's really a talented team. So I'm glad you get to meet them personally. With that, let me kind of turn it over to Paul. Paul's the CEO and really just an amazing businessman to work for him. So Paul, if you just introduce yourself, that'd be great.
Curtis, nice to meet you. Yeah, I'm the CEO, founder of TeraWulf, and my background is been in the power and energy complex the last 35 years. As the founder and owner of Beowulf Energy, we would always partner with guys like Blackstone and BlackRock and Evercore and Energy Spectrum, First Reserve, and we would build, own, operate power plants. We've had power plants, hydro, solar, wind, coal, gas. We've done it all. And several years ago, we were approached by Merrick Akamoto, a Marathon, who wanted to build a crypto mining complex, but he didn't really understand energy. He had miners on order, and we made a deal. And we took down 6 million shares of Marathon, and we provided him a site, and we sold him electricity from my plant, and we designed and built his crypto mining center, and then we operated it for him. So at a time, the crypto markets were obviously very different, but at a time when Marathon was $7 billion market cap company, they had 5 employees and we had 45. And we were the only site they had that was generating mining Bitcoin for them. We decided to go our own way and form TeraWulf a couple of years later. We did it for, good reasons. The first one was our management team has been together for a very long time. I have, at least 15 people that have been with us 12 years at the senior leadership level. You should think about that, right? 15 people that literally we've all been together for at least a dozen years. My co-founder and chief operating officer, Nazir Khan, came to me from Evercore. We've been together over 20 years. Carrie Langlis was at Goldman Sachs for a decade, been together over 15 years. She's our CSO, used to be director of finance. Our chief financial officer, Patrick Fleury, was at Blackstone GSO when we ran the Blackstone GSO power plant fleet that we ended up buying from them and ultimately retired. Stephanie Fleischman, our general counsel, has been with us over 15 years, used to be at Paul Weiss. So we have a very sophisticated team, unbelievably knowledgeable with respect to energy infrastructure, and that is what Bitcoin mining is. And we've been together the whole way. I could, give you another list of the next 5 or 10 people, but again, together the whole way, really seasoned, knowledgeable energy infrastructure folks. And what's that mean? It means we're experts in procurement, we're experts in project finance, we're expert in distressed financing, we're all about execution. And so the first reason we wanted to go off on our own was to do it our way, our team. Second reason was we wanted to be vertically integrated. All the folks that were out there mining were hosts. They were paying their toll and mining day one. We wanted to build out our own infrastructure and operate our own infrastructure, and that took time and it took capital, right? So we wanted to be vertically integrated. We thought that would be critical when, if Bitcoin prices fell, we wanted to be the low-cost guy. We wanted to be the guy that no matter how marginal the market was, we were going to be the winners. So we wanted to be vertically integrated. Third, we wanted to be zero carbon. We've been in the power business a long time, and we've seen how the market has changed. And there is no doubt that it's a combination of wanting to do the right thing, just ethically, the notion of, hey, if we can make Bitcoin out of and not generate carbon, why not? It's a win. If we could do it, it'd also be low cost. That's a double win. If we could do it and meet all sorts of regulatory compliance that we could foresee coming down the pike, then it's a triple win. So zero carbon was a big deal for us. And then lastly, we thought by doing it that way, we'd be the low cost operator. So we wanted to change the structure, of how one spends money on mining. And so we were not going to expose our investors to the volatility of gas prices. We weren't going to expose our investors to pass-through costs because regulation came down the line that said, hey, we're going to tax you extra because you're coal or gas sourced. So we wanted to have that sort of low-cost component. So those are the three big reasons we decided to go on our own. TeraWulf came out, top of the market. We sucked wind for a little while because the market was south and we had no volume and we didn't have somebody like Jason to get our message out. I think the market's changed. I feel we're really getting ready for a bull run, and we're not a show me story anymore, right? We are up and operating. We're weeks away from 5.5x hash. And so we are digging in, driving costs lower, making zero carbon Bitcoin. We think it's cool and we think we're going to win. So that's who I am. On another day, we should talk about real estate because we had a thesis for a long time about how to rebuild small towns in America that we actually have done in Eastern Maryland. It's a really cool thing. We'd love to talk about it. But, we had a thesis. We drove up real estate values as a result. We drove up, the community within the town and the sort of the democracy of the town by having people come into a downtown center and really talking and stuff. But that's another day. Let's talk Bitcoin.
Yeah. Yeah, that's an excellent story you guys have there. And I guess I want to give you guys all kind of a chance to, introduce yourselves and see, like you said, you're a team that's been together a long time. So obviously you all have a role to play in this. Might as well take that opportunity and at least let everyone know what you guys do, how you do it, and where are you going to take it from where we are now and evolve this into a business that will survive into the next bull run and even whatever comes after that.
Well, in terms of that, then let me start off by introducing Carrie, and then get on to Patrick, who's our CFO. We can talk about the bar we're trying to set in terms of financial reporting and the transparency element. But if we start with Carrie, Carrie and I have been together a real long time. Like I said, decade at Goldman, really seasoned executive, the right arm here for running this business. And maybe she could also talk a little bit about our ESG element. We have, I would say, of our top 10 executives, 6 are women. And have been with the company for a decade plus. So it's not an accident, it's like just real absolute fierce talent. We talk about the zero carbon ESG element where I think the market's coming around to start to pay for that again. But Carrie, why don't you talk a little bit about yourself?
Yeah, sure. Nice to meet you, Curtis. And thanks, Paul. So not sure, go over again what people have said. I've been with Paul and team for over a decade, 13 years now. And before that, I was in investment banking at Goldman Sachs, where Paul was actually a client. I focused on the energy and power sector, doing M&A and financing and all that good stuff. And so we had done a deal together, and that's how the relationship started. I spend my time here focused mostly on strategic things, and it covers a lot. It's sort of looking at what our team is doing, where we're spending our time, opportunities that we should be considering, internal, whether even internal or organic things that we should be pursuing. The ESG element of that has been part of my focus. We actually have a charitable foundation that we started when we took TeraWulf public in December of 2021. And we've made a number of commitments out of that foundation to sort of enable our mission outside of Bitcoin mining and sort of for the public good. So we're excited about the opportunities that we do there. But we really started TeraWulf, as Paul said, to mine Bitcoin and sort of be the adults in the room. So we have 2 sites, Lake Mariner in New York. That's actually the site of what was the last standing coal plant in the state of New York. It's now retired. We own that plant as a private company, and we've since retired it, refurbished it, reclaimed all the property in consultation with the state, and it's now home to up to a 500 megawatt Bitcoin mine. It's located 25 miles away from Niagara Hydro, so it sources 91% hydro and nuclear power. We've got 60 megawatts operational there today, and we're adding another 50 megawatts, which should be completed here in the next few weeks. So we'll have 110 megawatts operational there. Again, I mentioned that site can go up to 500 megawatts, and it's pretty impressive if you go out there because, you know, it's a real story of turning an industry that really supported that area of the state for many generations. We had people working in the coal plant. There were 3 generations, you know, grandson, father, grandfather, all working together. And you know, that plant was retired and really had an impact on the location and sort of the opportunities that were available for folks. And we've now transitioned that site and really brought it to sort of the next generation of opportunity for the area. So we've retrained some of our folks, brought them back. I think we've got more than a dozen people that were former workers at the coal plant and retrained and rehired as Bitcoin mining facility operators. So it's really kind of a fantastic story. And if you can get out there and see how the old equipment that used to be part of the coal plant actually served as housing for some of the miners. So just, you know, if you ever get the opportunity, we'd be delighted to get you out there. Our second facility is in Pennsylvania. We're partnered with Cumulus Coin, and it's co-located and directly connected to a 2.5 gigawatt nuke facility called Susquehanna. We recently energized that facility back in February, and as of the press release that went out a couple of hours ago, we've now energized our full 50 megawatts of capacity there. So together with our operations in New York, we'll have 160 megawatts of Bitcoin mining capacity here in the second quarter. So it's been a big transformation for us over the course of the last year. We spent most of the bear market building, while other people may have been hosting and producing Bitcoin at other facilities. We were building our own because that's what we do and that's what we do best. And so the last few months, sort of starting with first quarter, have been really transformational for us, where we moved from construction to production. So that's sort of a bit of my background and sort of what our company is. Maybe Patrick, so I don't overspeak my turn here, I'll turn it over to you, and you can kind of talk about the financial elements of what we're doing and how that differentiates us from our peers.
Before we do that, just a couple of things I would want to highlight about what Carrie said. We own our sites. So the big difference, Curtis, between us and some guy that's a host is not, you know, when there's a transmission issue, it's my transmission issue. When there's a fuel procurement volatility issue, it's my issue. When it's people going out to repair a transformer at 2 a.m. in minus 15 degree weather in upstate New York, those are my people. So there aren't change orders. I cannot emphasize how important the vertical integration is into both efficiency and low cost. Okay. And if you take a look at what happened at Marathon, right? They were at Hardin, gone. Compute North, gone. How many dollars did they lose for their shareholders because of waste, because of the kinds of variation there were in contracts, because they were really hosts? They could not drive their own destiny. So everything that Carrie's been about from the operational and execution side is to enable us to have the lowest possible cost, the most efficient plants. And by the way, they're not little, right? That was an 800 megawatt power plant in upstate New York. The scalability there is mind-blowing. That's a 2 gig nuke in Susquehanna. Scalability is mind-blowing. And we have diversity of location. So we're not stuck in Texas where everything is, and if the wind's not blowing or the sun's not shining, or they get a late spring, early fall, winter, and knocks out all the transmission lines, we don't suffer those issues. So I think it's really important. And then I would also tell you that Patrick has set the bar, in my opinion, in terms of transparency and our reporting. You know, you probably get this now, Curtis. I mean, again, when you've been together for as long as we all have, we're all best friends. You know, we all know our kids. We all do everything together. And it all causes us to drive for absolute excellence in the workplace, because this management team, insiders and board, own over 50% of the company. So not only are we not diluting shareholders, but we are driving to run the company for profit. Like, it's not a dirty word for us. Like, Patrick literally lives to make us money. And the way we make money is by the appreciation of the value of our company and our shareholders. But go ahead, Patrick.
Hey, Curtis. So I think as Paul mentioned, I guess just taking a step back, before, my reluctant turn as a public market CFO here, I was an investor for 23 years and mostly in the commodity space. And what struck me about this space, and I think as Paul and Kerry and Jason have alluded to, was the lack of disclosure and the inability for retail investors and institutional investors to be able to compare, the 20 public companies in this space on an apples to apples basis. And so I think what you'll see if you look at our February investor presentation is, we are providing a level of transparency and guidance that any and every legitimate commodity business that I have ever looked at in my career, whether it's refining, oil and gas, copper, coal mining, it doesn't matter. But commodity businesses give you full transparency on their cost structure and their total capacity. And then you pick the commodity price, but you should be able very easily to get, the total production capacity and the cost structure so that you can get quickly and easily to what you think our EBITDA is based on a commodity price that you pick. And so those are the tools that we've provided, investors with in our deck. And I think, again, having before being CFO, trying to look across the space as an investor and figure out, what is the SG&A of some of our peers. It's impossible to do. I mean, literally, you can't figure it out, right? And I've been doing this for 23 years. So we're really, again, I think as Paul mentioned, I think of it as, me personally, I'm not crypto native, right? I'm finance native. And I've learned the crypto business. But I think, as Paul mentioned, I think we're among the few that are adults in the room in this industry. And I think one of the exciting things coming down the pike now is, we are fully financed, as Paul mentioned. We will have 5.5 exahash online next month. We put out a release today that we've got our full capacity up at Nautilus at the nuke. So in addition, as Paul mentioned, we own roughly 55% of the company, right? There's only one other peer that I know of that has double-digit insider management ownership. The others don't because they dilute shareholders into oblivion to fund, a HODL strategy or growth at all cost strategy. And that's just not what we're interested in doing. And so I think we're at a unique position now where I think, there's 3 or 4 things that really differentiate us versus our peers. And as Paul and Kerry mentioned, they're low cost. We're the lowest marginal cost producer in the space. In every commodity business I've ever been in, that's where you want to be invested because those companies survive cycles. We're zero carbon. We own 55% of the equity of the company, and we are done. We don't need to finance ourselves anymore. We can run the company for profit, reduce our debt and return value to shareholders and organically expand at our 2 sites, which have massive scalability, as Paul points out. So I do think, what I've tried to do, and Jason knows this, but every meeting I have, whether it's investors like yourself, whether it's retail, whether it's research analysts in the space, I say to folks, look at our deck and take that deck and go demand the same transparency from every single one of our public peers. Because I think until all of them start disclosing things the way we do, it's going to be, I find it impossible. I don't know how you pick, winners and losers in the space. And so, you obviously, I think, wield a pretty big stick. So, I think that would be, that'd be helpful.
Well, that's interesting. I wanted to dig into a couple of things you mentioned just there. One of them being your strategy, because what we've all learned over the last couple of years, and you guys, whether you consider it fortunate or unfortunate, you went public at the top of the market and build and position yourselves to where you are now, which is advantageous to be, and actually impressive that you were able to do it over such a short period of time during such tumultuous circumstances. So yeah, I mean, that takes a steady hand to be able to navigate that. But from here on, how do you look at that, navigating this, in order to run an operation that is truly sustainable in an asset class that is so volatile? How do you plan on navigating that?
Sure. I guess I'll take a stab, and then Carrie and Paul, you can jump in. So I think, Curtis, number one has been execution, right? Getting our both sites up and running, getting our full 5.5 exahash of capacity online. That's, like I said, we're literally weeks away from building 2 at Lake Mariner being energized. Once that's up, then again, the name of the game is execution. We want to generate as much profit as we possibly can over the next year before the halving. I think, the profit will be used namely to reduce our debt and then to return value to shareholders. And that obviously depends on how much value, it depends on where Bitcoin price is. But, that's, I would say, our plan, which is all the night, as Paul mentioned, we control our own destiny, right? I mean, that's all within our control. We just have to execute. I also think, as I mentioned, there's 20 public companies in the space, right? We've all seen this in the early 2000s with independent power producers, in the 2010s with oil and gas companies, but every commodity business has gone through cycles where there's too many public companies, all of which have $10 to $15 million of public company costs, and all of which, in my opinion, are subscale, right? I mean, these businesses all came public when capital was very cheap. Capital dried up, got extremely expensive, and everybody is, maybe other than, 2 of our peers is subscale. So I think there will be a massive wave of consolidation in the space. And we think with our team, and certainly with our high quality of assets, we're positioned really well to lead that. It'll be done obviously very, very carefully because, the number one cost input here is power. And so growth for just growth's sake doesn't make sense. You have to have really high quality assets that, are also zero carbon, that would fit well with our footprint.
Mm-hmm.
I would just want to add to that, when you look at consolidation, please appreciate that this team has bought and financed almost $4 billion worth of market value power plants in their career together. So we're capable of managing through a period of consolidation, and we'll be on the right side of it. I think you could look at the market today, and Jason he yells at me if I name names, but there are some deals out there that just make no sense at all, where you've got, a company buying another company for ridiculous value, and they still won't be generating half of what we're generating in Bitcoin a month. When we're at 5.5 Bitcoin, when we're at 5.5 exahash, we're at 400 Bitcoin a month, and we're just killing it, right? Because we're the low cost guys. The other thing I'd want to mention, Curtis, is we don't just own our shares, right? We buy them. I bought on the open market recently, but last year alone, we bought $12 million worth of stock in our company at the market, and I just want you to understand that has us aligned with our shareholders in a way that I don't think exists in any other mining company. And I'd be hard pressed to find, another other than a true venture startup by a well-established principle. You look at all the miners in the space, the CEOs are basically hired guns and they get stock grants. I put $12 million into the market on my stock last year. I also, through my own hedge fund, own $17.5 million worth of debt on the company as a passive lender to the company. Passive because the syndicate drove the market terms, and I funded $17 million of that. So if there's ever been a management team that believes that we're on the right path and is aligned with their shareholders, it's this team. And
yeah, I think the market has really woken up to that fact, and it has appreciated it. I think the recent moves in your stock indicate that or provide a pretty clear signal of that. One of the things though that I'm interested in learning about is like on that sustainability model, around the strategies like HODL, how much to sell each month, and growth plans over the, like, between, let's just say between now and the halving, because it's a lot harder to know exactly what's going to happen after that, although history suggests a certain outcome. Obviously, yeah, none of us know for sure what's going to happen or when it's going to happen, but yeah, that sustainability model is something I've been paying a whole lot closer attention to, as to how do you maintain operations, considering you make a product, that product is Bitcoin, and companies only make a profit when they sell their product. And in the last run, that was very unpopular if any miner were to turn and start selling Bitcoin. But it's just so turns out that had any miner done that, they would have been the ones rewarded for it in the end. And a lot of them ended up selling out their stack at the bottom, which just added insult to injury. Some of which was actually bought and not mined. Like there were a lot of fumbles out there, from a lot of companies. You guys have seemed to be able to at least, like, you were spared from the first part of that journey. You were involved in this industry, but not as a public company out in the open. And now that you have built this, and to do it at 5.5 exahash is no small feat. So that is impressive in and itself. But now you're going to be generating this Bitcoin. How much do you hold each month? How much do you sell? And what sort of drives those decisions on a month-by-month basis?
So first of all, please appreciate how we work. We all sit together every day. Second of all, we all have lunch every day together. Third of all, every Monday and every Thursday, we have formal committee meetings where we talk about our strategies, operations, investment committee approaches to things. So I just want you to understand that as an organization, again, I'm a Naval Academy guy. I like the chain of command, and I like us all to be in the same room at the same time and come to a collective decision that makes a lot of sense. Second of all, we don't have any particular strategy. We think that's bullshit. We think the notion of HODL at all costs is crap, especially when you're HODLing at all costs and then diluting your shareholders 100% to fund your operating costs, which a lot of companies have done in the past year. We will sell our Bitcoin to fund operations and pay down debt, and that's what we will do. And we will do it in a measured and thoughtful way. Fortunately, we have Patrick. Patrick restructured our debt, took it away from sort of an amortization to a cash sweep, so that we're able to sort of, when the going's good, we can knock out a lot of debt as quickly as possible. If it's not going good, we could run as long as we need to and not give them a dime. So we have a great degree of flexibility there. So the answer is we don't have a set strategy. We look at it every day. Okay. What we can do is manage our costs, and that we do aggressively. We are constantly looking to become the most efficient, low cost, and whether it's driving down your public company costs, or, we do a lot of work with respect to consolidation, strategic targets. We do it in-house as a result of the M&A skill set that we have in-house, and just driving down our SG&A. So, we can control our costs, but a strategy with respect to whether we HODL or not, I don't think that's the language of this business anymore, by the way. I think that was a language of a very, very passionate believer in Bitcoin who'd been through really tough times. I believe Bitcoin has broken through, is a mainstream asset class. And we're getting investors now that want to see properly managed companies mining Bitcoin and getting their costs down, getting their debt and their balance sheet sized right. And if you got to sell Bitcoin to do that, do it, and then let's go play. So that's where we are. With respect to the halving, I will tell you, I'm like you, who knows what's going to happen. But history tells me we're going into a period where there's less to mine, so the reward will be cut. it means the marginal miners, the guys with high expenses, won't survive. And that will mean the guys who are the low cost providers of mining services will win. And so I have the view that we're pretty bullish going into it. And in fact, the setup, while it's been unfortunate in terms of seeing the stumble of coin for a little bit, though I think we've seen a bottom settling in here, if not done, but capital markets closing up, it means we don't have people that we're competing against to build new facilities going into halving. It's just not enough time, and the capital's too damn expensive. We are built and we're scalable at our own sites. So we're uniquely positioned to benefit when others may not going into halving. And that's sort of the way I look at it.
Yeah, and on that side, like, I mean, you raise a good point that, like, again, people that maybe aren't as familiar with the game theory behind mining, especially when dealing with the halving, like you said, focusing on being the lowest cost miner. If you achieve that, means you're basic, well, I hate using words like guaranteed, but as time goes on, like you said, the ones that are upside down with their cost to mine will die. They will not survive. And
Curtis,
all of that equipment becomes up for grabs.
Well, take a look. I mean, you're dead on. I mean, take a look at what Bitmain's pricing their new equipment at. They're pricing their new equipment effectively at $16 a terahash. What's that do to all the guys with old, inefficient gear out there? It's worth nothing. Second of all, I would tell you in the power space, that is exactly what we've lived through for 25 years. Patrick, Carey, and I have lived through these cycles where the power plants, where the heat rate wasn't as efficient, right? Or the fuel cost wasn't available at a reasonable price. Those power plants became shoulder plants, or they were retired, right? And one day, you know, a year, you turn them on because the market popped. So we've seen this in the power space. So we're comfortable, and we're not anxious about dealing with it or problem solving through it in the Bitcoin mining space, right? That's exactly, if you are low cost, you win. We're 2 cents at Nautilus. We're 2 cent power at Nautilus. Well, I think we got a blended rate, Patrick, of around 3.5 cents. Even, and Lake Marion has been contributing almost like negative energy pricing recently. So, you know, we win, right? We just, you get the right answer.
I'd like to ask you guys about the nuclear site, because that's unique. How did this happen? Like, what's the story there?
So again, we believed we wanted to be zero carbon. That leaves you wind, doesn't blow all the time. Hydro, you know, pretty good, but not abundantly available in scale. We're one of the few sites that has that, and nuke. Patrick and Carey had unbelievable relationships with Talon. I mean, Carey, why don't you say how we ended up in the nuke facility?
Yeah, so I mean, when we got started, Curtis, a lot of the larger utilities and even IPPs were sort of reaching out to us to help them understand what Bitcoin mining is and how they might be able to benefit from it. So we were having discussions with Talon about, you know, helping them get up to speed and the value that co-locating a Bitcoin mine can help in supporting some of these, you know, super large, gigantic 2.5 gigawatt facilities that have tremendously high fixed costs and may ultimately need to rely on government subsidies to stay economic. And so we formed a joint venture, decided that, you know, initially it was sort of a test product or, pilot project, and it quickly turned into, a 200 megawatt facility, which we initially shared 50-50. And then we optimized because we optimized our ownership actually down to 25% because the infrastructure for us to build out in New York was actually far more efficient, because in Pennsylvania, true to the utility model, there's a lot of bells and whistles on that infrastructure. beyond what is likely efficient or necessary for a Bitcoin mining facility. And the reason for that is because they are co-located with a data center facility, and they wanted the facilities to be not only aesthetically similar from the outside, but also in terms of their capabilities on the inside. And so obviously when you're doing high computing, you need a much higher runtime and uptime than you do for Bitcoin mining. And so things were produced to a higher scale there. So that's a long-winded way of saying why we're at 25% and not a 50-50. But that's sort of how the relationship evolved. It started off with us educating them. And I think it quickly turned them from wanting to just do a pilot to actually being in the game. So that's where we are.
Interesting. So yeah, this was into the mentality that like people seem to not recognize that the power infrastructure system is going to become reliant on Bitcoin for its
100%.
stability and its own sustainability. It's again, when you think about the game theory behind mining, it makes perfect sense. But if you get lost in the narrative that we see in the, all the articles and the hit pieces that tend to float out there, it could seem like this is just funny internet money and a bunch of wasted power, but they don't understand what happens behind the curtain. And this is not new to Bitcoin. This has been the way our power grid has functioned forever. It's just that Bitcoin provides a very unique, call it a lever that they can pull on, that really, really helps them sort of manage a lot of the unpredictable nature of power generation. So yeah,
that's part of the problem that we see, right? Because it's education. People truly don't understand how the grid works, and then how Bitcoin mining or large loads that are location and time agnostic can support what is now a much more intermittent energy source when we're decarbonizing the grid. What they like to do is hang on to themes from 6 or 7 years ago, when you had guys in their garages that were plugging in, Bitcoin miners and then scaling them to 1 or 2 megawatts and using up municipal power and driving prices up. Those were not people that understood energy infrastructure, and those quickly fell away, right? But that was, people hang on to that and like to, regurgitate that theme even now, with most recently the New York Times. And there's just truly a misconception and misinformation about how these facilities are enabling the grid.
I would argue they're almost intentional misinformation. But again, I think that's, even though New York Times is an important publication, all that, I think people read it for what it is. It was kind of almost a fringe article and nobody cares, and they moved on. I think Riot had a proper response and the stock traded up the next day. So I think we're in a place now where people look at Bitcoin, it's an important asset class. Everyone should have some in their portfolio. And by the way, we hope regulation comes. We will embrace it. We think it makes Bitcoin even that much more important and available to the world in a proper way. And we're going to be the guys that mine it at the lowest cost, and we're going to do it ethically in a zero carbon way. And we think that's cool.
There's just one point I wanted to add, Curtis, going back to you had a question about sustainability of our business model, with the halving and there being few Bitcoin to go around. I mean, one of the things that is important to note is that while there may be a tremendous amount of consolidation opportunities, right? There's more than 24 public companies. A lot of them aren't going to survive through the halving, given their marginal cost of producing Bitcoin, but we don't need to do anything. And I think we need to be very careful about evaluating and even considering opportunities, because we have what arguably I feel confident saying are the 2 best assets in the industry at Lake Mariner and at Nautilus, right? And we have the ability to double our exahash at those facilities today, shovel ready. And at Lake Mariner, we can go up to 500 megawatts. So from a growth perspective, we have inherent in our portfolio today the opportunity to maintain that low cost, zero carbon, and grow in our portfolio versus diluting it with some other assets that may be on the cheap but aren't as pedigreed as what we have today. So we sort of in a very good position in that regard, because we can be very particular about what we're willing to consider and what we're not.
I guess, yeah, we hadn't even made it through all the, I guess Chloe had joined the call as well.
Yep.
Just might as well take a moment and let her introduce herself and what her role is.
Okay, hi, I'm Chloe. I'm the digital strategist for TeraWulf. So I run our social media platforms, the website design, anything basically digital that we put out, I help with that.
Okay. Okay, so now the other thing I wanted to get into, a big question again was expansion plans past 5.5 exahash. You're on the verge of achieving that now. So is that like a milestone? You set out to hit it, you're about to hit it. Like you said, it's not growth at all costs. So the plan now, it sounds like it's achieve that, hold and steady, focus on repayment of debt, strengthening the balance sheet, and then look for opportunities, but not just pursue growth at all costs and end up diluting shareholders.
Yeah, Patrick, why don't you, or sorry, Paul.
Yeah, I think, yeah, Curtis, I think that's right. I mean, if you look at our February deck, which I'll send to you right now, you know, we break down our cost structure on page 14 of that, and it's really 4 components. It's power, SG&A, what we call other OpEx, which is site-specific costs, and then interest expense. And so, you know, at a network hash rate of around 300, network hash rate's now a little higher, it's at 350. So this is a little bit higher than what I'm showing you, but you know, we're marginally break even at 16,000 Bitcoin, and that's fully loaded with every single cost that we have. Okay, and so you know, we have on the same page, on page 14, because I think very few folks are focused on it, but you know, we're showing a quote asset light miner, who's one of the biggest, largest companies in the space that you can figure out who that might be, who, by the way, you know, used to disclose 4.5 cent power, then disclosed 6.5 cent power, and then stopped disclosing power cost. So we just said, okay, let's take their old disclosure of 4.5 cents. And what does that mean when you kind of run it through our fleet, their fleet, look at efficiency, but then go through the halving? And what that means is, you know, post halving and a network hash rate that expands by about 30%. You know, we're mining Bitcoin at a total power cost of about 18, 19,000, whereas they're mining on a 1 cent differential in power at about 31,000, right? So again, when we look at our plan for the next year, we got 5.5 exahash that's going to be online any week. We've got a year where, you know, if Bitcoin stays around where it is today, 28, 29, 30,000, you know, we have effectively almost full 50% profit margins. We have another page in our slide deck, page 12, that you'll see, but at 25,000 Bitcoin price, we generate 60 million of free cash flow this year. We've got 146 million of debt. So we literally reduce our debt in half. And, you know, Bitcoin's higher than that. Bitcoin's obviously, you know, closer to 30,000. So we generate about 75-ish million at 30,000. So again, there's a lot of free cash flow that we start throwing off at 5.5 exahash, again, which will be there literally in a matter of weeks. And so, as Kerry points out, like you know, our strategy is maximize profits. We'll either reduce debt or return value to shareholders. And if the market commands it, right, because Bitcoin price goes up or we think there's a really good opportunity, then we'll grow first organically. Or if there's a very attractive, you know, public opportunity, then we'll look at that. But I think doing anything strategically ahead of the halving, as Kerry mentioned, you know, it's got to be a slam dunk, meaning we got to get stuff either really, really cheap, or it's got to be, you know, an incredibly attractive asset, which means really low power cost, and in a market that we like.
Yeah, I would just add on to that a little bit. You know, the primary thing we're going to do from a strategic perspective is continue to drive down our costs. If you look at our SG&A and compare it to anyone else's, like host model SG&As, it's the same or it's less than them. How could that be when we own and operate our own stuff and they're just hosting? So we have been unbelievably good at driving our SG&A south, and we will continue to do that. And, you know, clearly when you're building out your own operation, you're absorbing all sorts of costs in the development of your facilities. Now that we're up and operating, we don't need all that. So we could drive down costs. So it's going to be drive down costs, internal organic expansion at our shovel-ready sites, because we could double our XH just through those, and then look at strategic opportunities. But they got to really be the prom king and queen of opportunities for us to want to do it prior to the halving.
Yeah, because you have a lot of growth potential at the existing sites you have without needing to even acquire additional ones. You mentioned a substantial amount of additional power at the New York site, it sounded like.
Yeah,
So
Lake Mariner, we have 500 megawatts.
So like, I mean, that's up there. That's one of the largest sites in the world. And currently sitting at, you said, 150?
It's 110 now, and it will be at 106. Sorry, it's at 50 megawatts now, and it will be at 110 here in the second quarter.
Right. So that's like, yeah, that's a whole lot of growth there. And you know, with, assuming you were to populate that with the most efficient miners, yeah, that's a huge boost to your hash rate capacity. But like with that in mind, knowing how long it takes to develop the infrastructure for that, is there like do you intend on beginning that process prior to the halving, or again, is your focus mainly on repositioning yourselves and making sure that the balance sheet is strong going into the halving?
Curtis, we got to get the balance sheet is right now. We want to achieve 5.5 exahash. We are constantly looking at what the next step is in terms of internal growth. That's why we know our shovel-ready numbers. But you want to be able to contract it for it right. The miners are available. I mean, Bitmain will deliver -3 in June if you're ready to roll, right? So I think that's the likeliest path for us, expansion. But at what cost? And we want to take a look, and that's dependent upon Bitcoin pricing, interest rates, equipment costs, and all that. But we are shovel ready at those two sites.
And the other good thing, Curtis, is the way that our sites are designed is at Lake Mariner, they're identical buildings, right? They're cookie cutter 50 megawatt buildings. We built the first, we're building the second 50 megawatts. The third facility, the third building has already been scoped and work has already been started on that. And then similarly in Pennsylvania, each building is 100 megawatts and they're carbon copies. So to expand, the hard work has been done. And it's now just a matter of replicating what we've already done.
Is there anything, I guess, that we haven't covered that you guys wanted to highlight?
No, I'm just really grateful for your time, and Jason for the introduction. I mean, listen, I'm an old guy, right? And I'm very fortunate to have a team that is just amazing. You should, get hooked up with Jason and get yourself up to one of our sites. They're unique. They are the two preeminent premier sites in North America. You'll visit, we built our own power plants. We've built our own mining facilities. They're unbelievable. And we'd love to host you there. It's the only hosting that we're willing to do there. And it'd be great to show you what scale Bitcoin mining is all about. And I very much appreciate your time for us today. It's really welcome. And Jason's just been unbelievably generous with his relationships for us. So it's been super.
Well, and I appreciate as well I didn't expect such a show of force from the entire management team. So I'm very grateful for all of your time. I know that, again, you're running an important business, and the fact that you guys were all able to jump on this call, that means a lot.
Well, Jason tells us where to go and when.
No, listen, it's our pleasure, Curtis. And I think you now see why I'm really excited to be a part of the team. And, you know, when I say team, it's clearly a team. So the best thing I could do with our relationship is always provide you transparency, access to management. I know that you're smart enough to come up with your own conclusions. So I feel like we've done that and we'll continue to do that. So whatever you need, you just let us know. We'll wrap this up, Curtis. It's always a pleasure. You've got an open door with us and we look forward to chatting further.
Thanks.
Thank you very
Bye.
much for your time.
Okay. Bye guys. Take care.